Welcome back, you beautiful people, to the Real Collective podcast. I am your host, Sean Tasse, joined as always by esteemed colleague, friend of the show, and illustrious co-host Kyle Miller. Welcome, Kyle. Welcome. Happy Wednesday to you this week. How you doing?
Oh, living the dream as usual. Your hair looks great, by the way. I'm just gonna say it out loud. It's a sweet cut. Looks
Thanks, man. I
sharp.
really appreciate that. I last time I got a haircut, I kept the length and I kept the height, but I went a little I didn't go as high and tight on the fade on the side. And this is great for all of you people who are listening on Apple Podcasts and Spotify. You're like, I can't see your hair. Tune into YouTube so you can get
Yeah.
the full thing. I should get my that mirror and show you the back too. My thought process here is I'm not getting a haircut for another 6 weeks, which is going to lead me right to before Christmas. So let's go higher and tighter on the sides so that it doesn't get as puffy in that 6 week term. These are
Just decisions. Best decision. Good for
right,
you.
real estate podcast and haircutting.
Exactly. Yeah.
But
We
thank you.
do it all.
Gray Whale Barbershop. Zach's my boy. He does a great haircut. Highly recommended. Anyways, hit that like button, subscribe to the channel, share this with someone you think might need hair tips or would like to know more about real estate. You can also download on Apple Podcasts or Spotify. And if you'd like to schedule an appointment with Kyle or me directly, or you'd like to schedule a haircut, you can do that in our Calendly links below. Yeah, it's been a week, man. Things are different, weird, odd. Everybody, I was just talking at work here with Amanda, and she was saying, like, man, everybody has so many questions. People asking like a million questions before submitting an offer, like really delays the process. So we've got one property in particular that has had, I think, 30 showings in the last 2 weeks and no offers, and it's like everybody's circling, just waiting for someone else to offer. Hey, if you get an offer, let me know. If you get an offer, let me know. If you get an offer, let me know. It's like, yeah, man, I know how to do my job. That's one thing that I do for the benefit of my seller. I'm not just going to get an offer and not tell anybody, right?
But
So,
I think that seems to be just through listening and talking to a bunch of agents. That's the thing. Like open houses are not busy. But no, and I was just talking to a gentleman literally just a minute ago, and he was like, I was at this open house, and he goes, I was there for whatever 2-3 hours, and he goes, I was never alone in the house, right? Only 5 people, only 5 groups came through, but he was never alone in the house, which means people were there and sticking around and really looking,
yeah,
but no offers.
right.
So people are definitely sitting there circling. And I don't know what the trigger point is. You'd have to, I guess, from a buying standpoint, might want to see you could elaborate on what the sales tactic is on that, like the negotiation tactic, or if it's just people are like, and they're just scared
Yeah,
to pull the trigger right now. Like, I don't know.
I think that's it, right? So I feel like the $1 million skill set or ability right now is like, how can you get people off the fence? And if you have the thing to say or the thing to do, and you're the salesperson, and you can get the buyer to get off the fence and actually submit an offer, that is like, that's the golden ticket right now, right? Like, that's the golden goose. If you're a salesperson, real estate broker, agent, whatever it is, a realtor, and you're having a hard time with, getting buyers motivated to do stuff, if you can figure out what to say or what to do to make buyers say, yeah, okay, you know what, I'm going to do it. I'm going to jump in. You got the golden goose. Like, that will, especially right now, that's going to make all the difference. And the thing is, if you're the buyer who puts an offer in right now, I think you're getting a good deal, right?
Well,
So
I'm going back to my whatever I said a couple times ago was at least like like the data, right?
yeah,
Like I think we can agree, and we were talking about this last week, and we'll continue on, but think that like what we're seeing literally are buyers sitting on the sidelines, and something will trigger them to come back to the market. And I think if it's my suggestion to people, to buyers or people who are working with buying agents, right, is figure out what that is, because it's not going to be, it's only one of two things as far as I can tell, which is I want to see, and it's going to be, I hope, or I think rates are going to come down and make this better, or prices are going to come down and make this better. And if you can see that data, and then I think we've got something. And what I mean by that is, at some point, right, someone's going to jump. And that offer is going to be in, and then more people are going to offer. And that might be rates dropping, it might be prices coming down. But if rates come down, right? Come down a little bit, they'll grind down over the next 6-7 months, most likely, if we hold out on the rate announcement, which we can talk about in a sec. That stability shows up, fixed rates start to come back down. Someone's going to jump. But when one jumps, a lot of them jump. And that's going to mean we're back to low inventory, lots of people excited to get in who've been holding on, which takes prices up. You're not going to get lower rates and a much lower price. So the data set to look at is, if I buy today at 6, right, what's my payment? And if I buy in 6 months at 5, or let's call it 12 months at 5, how far down, like, and that price goes up X%, what's my payment?
Yeah.
And they're going to be very close to the same. So you're not, what are you waiting for? What are you getting?
Well, and the thing is, if you're waiting for a thing to happen, and that's what everybody's doing. Oh, I'm waiting for the rates to come down. I'm waiting for the prices to come down. Like you said, it's one of the two. You know what everybody else is doing? They're also waiting for the rates to come down or for the price to come down. And what's going to happen when the rates come down and the price comes down? They're going to be, hey, good. This is what I was waiting for. Ha! The prices are down, so now I'm coming to buy a property. Well, wait a sec. If you're all buying properties, the prices aren't going to be down anymore. The prices are going to be back up.
You and your 10 friends are trying to buy the same house again.
Yeah, exactly. Or, hey, I'm waiting for the rates to come down. Oh, good. The rates have come down. Now I'm going to go buy a property. So
or everybody.
9 friends. Exactly. So it's like the best time to buy is when nobody else is buying. And right now, like, especially like these next 2-3 months, I feel like it's buy time. Like if you've got the ability to do it, it's the right time.
Yeah, if you believe in real estate as a thing, whether and I'm specifically saying shelter, right? Pay for shelter.
Yeah.
And there's a value to that for you. Then yeah, zig when everybody else is zagging, and have a look, understand your data, do the math, right? Do the math, but trying to time the market, I just think like one person will win.
Yeah.
But I don't know if that's you,
right.
but one person's gonna win.
And 9 are gonna lose. You know who wins when there's multiple offers? The seller. That's the only
seller. Yeah, for sure.
Even the buyer who wins, who pays more for it than anybody else, kind of didn't win.
Yeah.
Right. So let's talk about it. Rate announcement. Rate announcement. We're recording this is Wednesday, October 25th. We are in the midst of a rate announcement. They were talking about, there was some chatter going into whether the rates might go up another quarter point or stick firm. Or when we were talking about these rates a year ago, we were pegging fall 2023 as, well, here's when the rates are going to start to go down. So they didn't go down, but they also didn't go up. Right. So I think, is this the 5th rate announcement of this year?
Sounds about right.
5th or 7th, something like that. And I know.
Yes, I think you should say, maybe about 7, because they've skipped a month or 2 here or there over, like summer and stuff. But yeah.
So I think, we all skipped a month or 2 over summer. I think we probably had 2 or 3 months where it was flat, and then 2 or 3 months where it went up like a quarter point. And what we found is that buyer sentiment improved when it was flat, when there was no rate increase, and buyer sentiment decreased as the rate was increased. And I think the more we can find sort of stability, the more we'll see buyer sentiment improve. And if we start to see rate drops, then I really think you're going to start to see that, you and your 9 friends sort of idea, right?
Yeah, and that's, we've seen that too. And it was a buddy of mine who was another broker who was suggested, I'm going to quote him basically, and it's when we see that stability of a couple Bank of Canada announcements going nowhere and just staying the same. When we see that stability, that's when we start to see a dip in the bond market, which then turns around and reflects rate drops in the fixed market, right? So that's going to be, so that's the thing. If we see we see that stability. So I have to look at the schedule and see. I think there's one more announcement in December, and that'll be key because that'll really set the tone, I think, for what we see is gonna happen. Because if they keep that stability, that's almost a quarter. It's almost a quarter, and it's two times in a row, and then people start feeling it. I don't know that we see. I would estimate. I don't think we see big changes. Probably until we're through the first quarter of 24. So it could be interesting to see what happens by March, April in terms of fixed rates coming down. I don't know that we're going to see prime come down, but the stability could be enough to see fixed rates start to drop, which then just goes and we start ramping up for spring.
Yeah, and I think it's going to be a perfect storm lining up for spring next year. I think if you're like I say, I think if you've got an opportunity to buy in the next 2-3 months, I think you'll be in a lot better shape than if you like all of the other lemmings say, hey, you know what? I think I'm going to wait until spring next year to buy. Okay, cool. I'll help you in spring. If you have a choice, I would suggest that you buy now.
But, yeah. And I think what people want to think about too is just the sales cycle right? Like you can buy a place in January and not close until April, right?
Snow's melting,
right? With the right. So it's not like, I got to buy in January and close in January. I don't want to move in the winter. Then don't, right? Like negotiate that. Now, somebody on the selling side might have to, and yada yada. But at the end of the day, like you work through that. But yeah, you can buy that place at that price and then move into it in the spring, and it still works, right? It doesn't have to be like now all the time.
Two of my best real estate transactions were like almost 6-month closings. Like one I bought in the fall and I closed in the spring. I was a flip, and then I turned around and I resold. I bought it for $450. I put 20, and I bought it in the fall, townhouse in Center Point, and I turned around and I closed on it in the spring, like in March or April, and then I sold it again at the end of the summer in 2021, I guess. Yeah, and in 2021, and I sold it for like $585. So it was just like a real quick cleanup lipstick job. Nothing wrong with the house, right? Just cleaned it up, made it look pretty, staged it back on the market, and yeah. And the other one was my primary residence. I bought in the summertime, and I didn't close until like Boxing Day or something. So the idea of buying a place and getting a long-term closing is a really good sort of way to set it up. And by buying time, you're essentially, while you don't yet own the property, you're allowing the market to improve, right? So it's great.
And the other thing too is that people will sit there and say, well, I've got my rate hold and it only lasts 120 days. You're right, it does. But the thing is, you can rebook that rate. Like if you had 5 months, right? If we do the right stuff, get everything pre-approved and documents verified, and then you've got a 6-month closing. If what we estimate to happen happens, meaning fixed rates actually start to come down, you can rebook that rate with your current lender. And I'll be honest, we can take that deal somewhere else. We don't like to pull deals from lenders if we don't have to, but if they're not playing the game and we've got an opportunity somewhere else, you do that. There's no penalty. Again, I don't like doing it. I'm not suggesting it's the right, just go and get 50 pre-approvals and all that stuff. What I'm saying is we can adjust that to make sure you're getting the best in the market at the time. So you might get the best of both worlds by buying now, closing later, and letting the rate train do what it does and jump on the best you can by then. So it could be an interesting strategy for people to use.
Going off the rails on the rate train. Let me ask you a question. If you do multiple credit apps, is that going to hit your credit? negatively?
Um, uh, not no. Short answer is no. There's been a change. There's been a change in the way at least Equifax does it.
Okay.
So if you go like I'll do a credit check when you do my application, and then you're going to go to a bank and the bank's going to do your credit check, and then maybe you get saucy and go see another broker and they have to do a credit check, and everyone's going to think, and they're not wrong at the time that if I do 3 checks, my credit's going to tank. Well, if you check today, if we did 3 checks today and you check your score tomorrow, it's probably going to go down. However, at the end of the cycle, whatever that is, 30 days, 15 days, wherever it is, right? Equifax has actually redone their algorithm to say, okay, mortgage checks are coded one way. We group those all together as one.
Right. Got it.
So then, and then everything else, yeah, that's all credit checks. But all the 3 checks you just did will get grouped together as one, meaning your credit score, will it drop? Maybe a little, but it's not going to tank. And even if it does drop, by the time the cycle happens, it should rebound back up because they're like, oh yeah, we checked, it's cool. So don't let anybody tell you that. Don't let anybody tell you that you can't go anywhere else because we'll tank your credit. Bull. It's an old tactic. I'll be honest, I used it. I'm like, don't go shopping that much because I got 32 lenders. I can get you just about everything here, right? And if you go too often, too much, then it's going to tank your credit. Well, they changed that, so that's not true anymore. It was true to a point, but now it's not. So there you go.
Good to know. Perfect. Let's take a quick pause. We'll jump back in and talk about a new announcement from CMHC regarding some refis and some tricky sort of stick handling moves that you can do there. And if we've got some time, I've got an interesting information regarding paperwork and notices of fulfillment and that kind of jazz. So we'll jump into it on the other side. As always, hit that like button, subscribe to the channel, and share this with someone who you think might like this type of info. And if you'd like, you can book an appointment with Kyle or I or in the Calendly links below. Maybe in the second half, I'll be better at words. We'll see you soon.
This episode of the Real Collective podcast is brought to you by Real Collective. Real Collective brings together best-in-class real estate agents and collective experts in the field to deliver the best possible service to our clients. We govern ourselves with honesty, open-mindedness, and compassion. With diverse skill sets, our agents are able to better serve a wide array of clients, including first-time buyers, first-time sellers, transferees, estate sales, investors, and rural, vacation, and luxury properties. Authenticity and transparency are pillars of our process, which allows us to put our clients at the center of everything we do. Our years of experience and knowledge allow us to deliver prestigious service and optimal results. If you are interested in buying or selling your home, contact us today at realcollective.ca.
Welcome back, you beautiful people, to the second half of the Real Collective podcast, where I might be able to manage my own words, maybe not. We'll find out as we move through it. As always, hit that like button, subscribe to the channel, and share this with someone who you think might like this kind of information, and book an appointment with Kyle or I directly in the Calendly link below. If you're watching us on Apple Podcasts or Spotify, thanks very much if you're listening on those two things. If you're watching on YouTube, then you get to see my sweet, sweet haircut. We talked, did a quick break, talked about what we were going to get into. CMHC has some interesting stuff that you want to hit on, Kyle. So take it away. Start with that.
Yeah. So I have when you have your mortgage renewal maturity, right? There's basically 3 things you can do. Just to get context. One, you just sign back with the lender you're with. There's pretty much no questions asked. Here's the rates we offer you. Sign, send it back in. You're done. That's it. Super easy. Then you can do what's called a switch, which means you take your mortgage and just move it to a new lender. Everything stays the same though. So names have to stay the same. Amortization stays the same. You can't add any money. There's a little bit you can add, like up to $3,000, typically for like discharge fees or, interest, things like that. But nothing, can't like pay out a credit card or car loan or anything like that. Right. To do that, you have to do a refi. And the big difference there is that refis, you change everything. You can change the lender, you can change the amortization, you can add money, you can take someone off title, like if you're getting divorced, you do all that stuff. Now, the main thing to know is that anytime you're getting a new mortgage with your current lender, with a new lender, you have to requalify, right? You have to get you have to do the whole application again. So we're talking pay stubs, taxes, whatever we need. That's what you got to do. And today, the tough part with that is the fact that the stress test is so high because the rates are high. So, you know, you're qualifying, you want a new mortgage, it's going to be at 6.5. You got to qualify like it's 8.5, which makes it way tougher to do. But what, and the difference, the other thing too, is that switches were the same thing. You can typically get in a certain case, you can get a better rate on a switch, but you still have to qualify at the stress test, which makes it tougher, especially if you're carrying a little bit of debt. But what they've come out with, I shouldn't say come out with, it's always been there, but these guys write policy super gray. Like you think you understand it, and then they're like, well, no. So you're like, ah, shit. So they're always, it's like suggested to a point. Yeah. Anyways, what they've clarified is the fact that if you're just switching your mortgage, you don't have to actually use the stress test anymore. If it's insured, if it's transactionally insured, you don't have to use the stress test. So you're going to get a deal at 5.8, 5.96%, but that's what you qualify at. People say, well, so what? It's still high. It is high, but what it's not is 8, which means if you've got a little bit of debt carrying or a payment or something that at 8% would push you over the threshold of not qualifying, now that 2% buys you a lot more flexibility in terms of qualifying. So that's a big deal. And that's across the board with anybody who's governed by B20, which is essentially anybody that does A lending. Alternative lenders, they have B20, but they don't have insurance, so it doesn't matter. Private lenders do whatever they want. So that's that. And then, but in the A space, yeah, it'll be good.
So let's start off with this. CMHC, my bad, Canadian Mortgage and Housing Corporation. They set the policy for how people can buy houses, essentially, and own houses.
Yeah, the insurance and the default insurance is the big thing.
Yeah, and B20 is the regulations for the banks for the top.
B20 was the rules that were put out by OSFI for changing the mortgages. OSFI, Ontario Security Financial Industry. I got to check that in. I say it all the time, but I forget what it means. I'm not gonna lie, but because I just take their rules and like, okay, fine, like that's who's telling me. That came back out 2016. B20 started coming in.
Good.
So
what does that mean for Joe Public? Is it apply more to someone who is in a fixed or variable, or someone who's coming for renewal?
It's anybody, yeah. So it's people, for this, it'll be people coming up to maturity, coming up to renewal time. And specifically if you had default insurance on your mortgage. Now, we fully expect that that's what CMHC wrote. Fully expect that the other two insurers, because there's 3, CMHC is obviously a Crown Corp and it's funded through your payments to them, but then also the government. But Sagen, Canada Guarantee are the other ones as well. So they fully expect that that'll still be part of their rules because they tend to follow CMHC a lot. They're just privately owned. Right. So that's that. But yeah, if you have a mortgage, and the key to this too is it doesn't matter when you have the insurance. Like you have it for as long as you have that mortgage, right? So if you bought 10 years ago but have never refinanced and have never changed the mortgage, just keep on keeping on, you still have default insurance on that mortgage, and you can use this tool if it suits you, right?
How do you know if you've got default insurance?
You can call them. You can actually call them and say, hey, this is my address. Do I have insurance with you guys? It's 3 phone calls to make, but or talk to your original broker or bank if they're still kicking around. Check your original commitment. It's usually right on the front page. Here's your mortgage. There's your default insurance. That's the loan amount. Bang. And some of them have an actual number in the paperwork. You probably didn't see it because rarely do people go through it. I do because I'm a dork like that. But yeah, but it's there, and we can find it. So
cool. Yeah, that's me signing mortgage documents.
You trust, full trust.
Absolutely. Yep. Yeah. Why not? Right. I expect people to trust me, so why would I not trust the mortgage broker? I'll give you my quick tidbit. I thought this was really interesting. When we're almost done an offer, one of the things we have to do is fulfill a condition, or what we sometimes do is amend the condition. And in the past, there was the conversation of, hey, I don't want to send a notice of fulfillment. I first want to amend this deal, and I want you to change our purchase price from $750 down to $740. Okay, so here's the amendment. It changes the purchase price from $750 down to $740, and I am on that amendment. I'm throwing on the fact that, hey, I don't need the mortgage financing anymore. I don't need to worry about the condition of home inspection anymore. Sign this paperwork, and it's a wrap. We're done, right? Turns out, we heard from the lawyers earlier today that you cannot do that. You have to first send the amendment that says, here's the new price that we're agreeing upon, receive that back, and then secondarily send the notices of fulfillment, or the deletion, or removal of the clauses. The reason is, if you send it the first way, where you send over the paperwork and say, I'm removing these conditions, or I'm fulfilling these conditions, you have given notice to the seller as the buyer or the buyer's agent that you have fulfilled your conditions or are willing to remove your conditions. Whether or not they sign it back to you and agree to take off $10,000 doesn't matter. You have received notice. Because you've received notice, they can be like, yeah, I'm not signing that back. Thanks very much. We've got a firm transaction. It's $750. Take what you get.
Wow. That's interesting.
Isn't that
that's been happening for a while. So there's a lot of, wow. Yeah. Cause that's even just some of the ways that realtors do it. Like they're just like, I don't want to do the NOF. I'm going to do it this way. Just literally out of preference.
Yeah.
Wow. Legals. Sell your house by yourself, they said. It'll be easy, they said.
Yeah. So yeah, you want to. Wow. I mean, and here's the thing, right? Like you just said, you've seen that deal come across your desk where it's firmed up on an amendment and it gets signed by both sides. You've seen that. I've seen that. I've done that. I've been that guy. And what a huge risk you're putting your client at. Right?
Well, yeah. And maybe this doesn't go along the same lines, but the other thing to watch out for is from the financing side, is you drop that price 10 grand on an amendment, NOF, however you did it, right? However you did it.
Yeah.
Your financing gets scrutinized on that too, right?
Really?
Like they want to know, they don't always, but they can definitely come back and say, why did it drop 10 grand? Right. And then that is the can of worms. Yeah. Why? Just because you're a great negotiator, or what? Right?
What's wrong with the furnace? Where's the mold? What's the foundation issue? 10 grand's a lot of money.
Yeah.
What is it? Right?
Their imaginations can go wild over 10 grand. Wild. And it's up to, and the thing is, they hold the money, they make the rules. Yeah. That opens up, okay, well, let me see we found this crack. Let me see the inspection report.
Yeah.
Do we need an engineer's report now?
Yeah.
Right? That deal goes sideways real quick. So I'm not saying don't negotiate. I'm just saying careful with how you do it.
Well, yeah. And I mean, 10 grand normally is negotiated. So you would have asked for 20. So what is it?
Mm-hmm.
Right. So yeah, that's also something to take into consideration. Yeah, I was surprised by that because there's so many agents, and there was another agent in our office who was saying, hey, I received that, right? I received an amendment, and on the amendment, it was the deletion of the conditions. And so he's like, well, first of all, hey, you know what? You can't do that, and you shouldn't do that, and all that kind of stuff. So just if you're a realtor and you're watching this, pay attention. If you're a consumer or general public and you're watching this, make sure that you're hiring the right person who isn't cutting corners and is always learning. Right? Hey, there's always more for us to learn. So I think that's a good place to wrap up. I think we've covered what we needed to cover. Unless you got anything else exciting to pitch.
No, I think the people do the math. Do the math. If people want to do this whole wait thing, know the math behind that and what it's going to mean if rates come down, rates come down, prices go up. Take a look at that difference. You may not see that it may not be worth the wait, to be honest.
I've got an exciting announcement that I should have mentioned at the very beginning of the show. This is episode number 100.
Right on. There you go.
Hey,
Hey, congratulations. I've only been here for a couple, so I wasn't here for like 5 or 6. So congratulations.
I feel like it's been like closer to 10 or 20. It's a big deal. You should get like sirens and confetti and shit. So we don't have any of them, but it's exciting. Maybe there'll be something happening in the background that looks like that. Maybe not. We'll see.
Yeah, the editors will get some nice 100.
Yeah.
Thing on the outside. Be good.
We should have done like a giveaway or a draw or something. Maybe at episode 200. We'll figure it out when we get there.
Guys, we'll get this right in the next 100. Promise.
Yeah.
We'll get it.
Or,
keep track of it. We'll get it.
Or we'll just keep trying. Anyways, as always, hit that like button, subscribe to the channel. You can watch the back catalog of the other 99 episodes if you'd like. You can also book an appointment with either Kyle or I in the Calendly link below if you're listening on Apple Podcasts and Spotify. Thank you for your ears. If you're watching us on YouTube, thank you for your eyes and ears. And until next time, keep it real.
Collected.